Friends, let me talk to you on a very important subject, namely the role of banking. That is the role and responsibility of the banks in India, the primary and secondary functions of the banks, especially the commercial banks, the various types of banks, etc. etc. See, banks are the institutions where people can deposit their savings and they are able to withdraw money from the deposits whenever they require. So people who want to borrow the money for business and other purposes, for short-term or long-term purposes, they can also get the loans from the banks at reasonable rate of interest. That's more important. So this banking system encourages the savings habit and thereby makes the funds available for the productive use, and it also acts as an intermediary between the people and of course between the people having their surplus funds, surplus money, and those requiring money for various business activities. So bank is a lawful organization. They play a significant role in the economy of a nation, and there are laws which regulate the banking activities in our country. So depositing money in banks, also borrowing money from banks, they are all the legal transactions. So banks are also under the control of the government, hence they enjoy the trust and confidence of the people. So it facilitates the business transactions through only check systems, not through currency. All receipts and payments by checks instead of currency. So that's also a very important point to be noted. It also facilitates the import-export transactions. It helps in the national development by providing the credit to the farmers, small-scale industries, self-employed people, as well as to the large business houses, which lead to the balanced economic development in the country. So it helps in raising the standard of living of people in general by providing the loans for the purchase of consumer durable goods, for the purchase or construction of houses, for the purchase of automobiles, etc. And banks also render many other useful services. They are called the secondary functions, which we will study in detail later. So, like the collection of bills, the payment of foreign bills, the safekeeping of the jewelry and other valuable items, certifying the credit worthiness of the business firm, the business if they require, and discounting of the bills, providing the OD facility, issuing the letters of credit, and so on and so forth. So now we will see the types of the banks. See, there are various types of banks which operate in our country to meet the financial requirements of the different categories of the people. Like the central bank. So central bank in India is the Reserve Bank of India. Then comes the commercial banks. So in commercial banks there are public sector banks, that is government banks, the nationalized banks, SBI and its subsidiaries, etc. Also private sector banks and the foreign banks. We will see which are all these banks. And number three, there are what are called the development banks and also the specialized banks, and then the cooperative banks. Cooperative banks, again, there are different categories: the primary credit cooperative, credit societies, the central cooperative banks, the state cooperative banks, and so on. So we'll see these details one by one now. So coming to the central bank plays the role of guiding and regulating the banking system of a country. It does not deal with the general public. It acts essentially as a government's banker. It maintains the deposit accounts of all other banks, and it also advances money to other banks when needed. The central bank provides the guidance to other banks whenever they have any banking problem. So it is therefore known as the bankers' bank. So the Reserve Bank of India, it is the central bank of our country. The central bank maintains the record of the government transactions, the government revenue and expenditure account under various heads prescribed by government. It also advises the government on the monetary and the credit policies. It decides on the interest rates for bank deposits and the bank loans. And in addition, the foreign exchange rates are also determined by the central bank, that is, by the Reserve Bank of India. And another very important function of the central bank is the issuance of the currency notes. So regulating their circulation, issuing the currency notes and also their circulation, regulating their circulation in the country by different methods planned by them. So no other bank can take up this work. No other bank other than the central bank or the Reserve Bank of India can take up this work of issuing the currencies. So the commercial banks, so now we will come to the commercial banks. See the commercial banks, as I said again, there are three types: the public sector banks, private sector banks and the foreign banks. So coming to the public sector banks, they are the banks where majority stake is held by the government of India or the Reserve Bank of India. So like the examples are State Bank of India, their subsidiaries and also other nationalized banks. And coming to the second category under commercial banks, that is the private sector banks. So in this case, the majority of share capital of the bank it is held by the private individuals. So these banks are registered as companies with limited liability. So the examples are it may be Jammu and Kashmir Bank or Bank of Rajasthan Limited, Development Credit Bank Limited, Lord Krishna Bank Limited. Similarly, the Bharat Overseas Bank Limited, Global Trust Bank, the Indonesia Bank, or many other private banks. I mean, which existed then, which exists now, and which may come up in future. And then comes the foreign banks, the foreign commercial banks. So these banks are registered and have their headquarters in a foreign country, but operate their branches in our country. So some of the foreign banks operating in our country are the HSBC, Citibank, American Express Bank, the Standard and Chartered Bank, Inglés Bank, etc., etc. So the number of foreign banks operating in our country it has increased. The number has increased since the financial sector reforms of 1991. But basically, the functions are one and the same, the commercial functions. So the functions of the commercial banks, they are of two types. One is the primary functions and the other one is the secondary functions. So what are these primary and secondary functions of the commercial banks? Coming to the primary functions, number one, accepting deposits, granting loans and advances. So these are the primary functions. So accepting deposits is the most important activity of any commercial bank. So it is to mobilize the deposits from the public. People who have surplus income and savings, they find it convenient to deposit the amounts with banks. And depending upon the nature of deposits, the funds deposited by the public in the bank, they also earn interest. So thus deposits with the bank grow along with the interest earned. So if the rate of interest is higher, the public are motivated to deposit more funds with the bank. And there is also safety of funds deposited with the banks. That's most important. And they accept the deposits in several forms. What is the type in which they accept these deposits? So the main kinds of deposits are the current deposits, similarly the savings bank deposits, fixed deposits, etc. So current account deposit means it is also called as the demand deposit. That is, they are repayable by the banks on demand. So such deposits they are generally maintained by the businessmen with the intention of making the transaction with such deposits, and they can be drawn upon by a check without any restriction. That's most important. And the depositor can make any number of transactions for deposit or withdrawal of the money. Banks do not pay any interest on these accounts, and rather banks impose certain service charges for running these accounts. And coming to the fixed deposits, they refer to those deposits in which the amount that is deposited with the bank for a fixed period of time. So these deposits, they carry a higher rate of interest. They carry interest which varies directly with the period and also the amount. And depositor here in this case, he generally makes only two transactions. That is deposit of money in the beginning and withdrawal of money on maturity. So these are the only two transactions permissible here. And coming to the savings deposits, that is by opening the savings bank account and depositing the money into the savings bank account, they have got the combined features of both the current account deposits and the fixed deposits. Here, the depositors are given the check facility to withdraw money from their amount from their account, but some restrictions are imposed on their number and amount of withdrawals in order to discourage the frequent use of savings deposits. And they carry a rate of interest which is less than the interest rate on the fixed deposits. And it must be noted that current account deposits and the savings deposits, they are the deposits which can be transacted with a check. We call it as in simple language checkable deposit. Whereas fixed deposit is a non-checkable deposit. You cannot draw it as and when you require by issuing a check. And the other function, important function, is grant of loans and advances under primary functions. So, loans and advances, see, such loans and advances are given to the members of the public and to the business community at a higher rate of interest than what is allowed by the banks on various deposit accounts. So these loans and advances are always given. I mean, they always carry a higher rate of interest than your savings bank account or whatever you earn on your deposits, the fixed deposits. So the rate of interest charged on loans and advances also varies according to the purpose, according to the period of loan, according to the nature of loan, according to the mode of repayment, etc., etc. So that is, if it is taken for 15 years, it may be different. If it is for 20 years, it may be different, depending on the amount, the nature, the purpose, etc., etc. So loan is granted for a specific time period. That is, generally commercial banks provide short-term loans, but the term loan means loans for more than a year. So they may also be granted either, the entire amount in lump sum or the amount in installments. So that's what is more important. So lump sum or in the installments to be drawn, say after 3 months or after completion of a particular activity and so on. Generally, they are granted against the security of certain assets. Banks grant loans certainly against the security of certain assets, and a loan is normally repaid in installments. However, it may also be repaid in lump sum. There will be a provision. And granting of loans and advances. Loan is different, advance is different. Advance, it's a credit facility provided by the bank to its customers. That is, it differs from the loan in the sense that loans may be granted for longer period, but advances are normally granted for a shorter period of time. Further, the purpose of granting advance, it is to meet the day-to-day requirements of the business. And the rate of interest charged on advances, it varies from bank to bank, and interest is charged only on the amount withdrawn and not on the sanctioned amount. That is the basic difference between the advance and the loan. And types of advances. See, banks grant the short-term advances or the financial assistance by way of the cash credit, overdraft, bill discounting. So these are all the advances only, means paying the amount in advance. So cash credit, for example, it is an arrangement whereby the bank allows the borrower to draw the amount up to a specified limit. So the amount is credited to the account of the customer. And the customer, he can withdraw this amount as and when required, not necessary to withdraw it in lump sum. So interest is charged on the amount actually withdrawn by him, and the cash credit is granted as per terms and conditions agreed by the customers, and it is not on the entire amount that is sanctioned. Similarly, the overdraft facility also is more or less similar to this. Coming to the overdraft, it is also a credit facility granted by the bank to the customer, permitting the customer who has a current account, he should have a current account with them, with the bank, to withdraw more than the amount of credit balance in the account. So this is the benefit allowed to the current account holders to draw the amount more than whatever is the credit balance in their account. So this is a temporary arrangement. Overdraft facility with a specified limit, it may be allowed either on the security of assets or on personal security or on both. And the other one is discounting of bills. Banks provide short-term finance by discounting bills, that is, making payment of the amount before the due date of the bills after deducting certain rate of discount. So the party gets the funds without waiting for the date of maturity of the bill. So even a post-dated check, so which matures maybe after 15 days or 1 week or 1 month, it may be paid in advance, but they will certainly deduct certain rate of discount, certain amount of discount. So in case any bill is dishonored on the due date, then the bank can recover the amount from the customer. That is the condition. So these are all the primary functions of the commercial banks. And coming to the secondary functions, in addition to the primary functions of accepting the deposits and lending money, banks perform a number of other functions which are called as the secondary functions, and these are issuing the letters of credit, issuing travelers' checks, undertaking the safe custody of the valuables or the important documents and securities by providing safe deposit vaults or lockers, providing customers with facilities of foreign exchange dealings to the regular customers of the bank, transferring money from one account to another account and from one branch to another branch. So these are all the facilities, secondary functions that are available with the bank. Similarly, standing guarantee, for example, on behalf of its customers for making payment for the purchase of goods, machinery, vehicles, etc. So this is very, very important to find out the line of credit of the customers with a particular bank. A bank certificate would be required. Then only they can avail the loan from their suppliers or the items in advance before making payment. And similarly, the bank reports, the standard bank reports are always laid apart. And then collecting and supplying the business information, providing reports on the credit worthiness of the customers wherever it is required, where it is called for, providing the consumer finance for the individuals by way of loans on easy terms for the purchase of consumer durables like television, refrigerator, etc., etc. Educational loans to the students at reasonable rate of interest for higher studies, especially for the professional courses. And more latest secondary functions are the e-banking, for example, the electronic banking. With advancement in the information and communication technology, the banking services are also made available through computers. And now, in most of the branches, you see the computers being used to record all the banking transactions, and information about the balance in your deposit account can be known through computers. And in most banks nowadays, the human or manual teller counter is being replaced by the automated teller machine ATM. The banking activity carried on through computers and other electronic means of communication. So that is called as the electronic banking or the e-banking. So let us now discuss about some of these modern trends in the banking in India. The automated teller machine ATM, as I said, banks have installed their own ATMs throughout the country at convenient location. So by using this, the customer can deposit or withdraw money from their own account anytime. No time restrictions round the clock. And similarly, debit cards. The banks are now providing debit cards to their customers, having the saving or current account in the bank. The customers can use this card for purchasing the goods and services at different places in lieu of cash. So without using cash, they can do that by using the debit card. And the amount paid through the debit card, it is automatically debited, that is deducted from the customer's account. But the credit card, they are issued by the bank to the persons who may or may not have an account in the bank. But they should be of reputed value to the bankers. And just like debit cards, credit cards are also used to make the payments for purchases so that the individual does not have to carry the cash. Banks allow certain credit period in the case of credit cards. Banks allow certain credit period, maybe 15 days, 1 month, 45 days, or whatever it is. They allow this period to the credit card holder to make the payment of the credit amount. So interest is charged if a cardholder is not able to pay back the credit extended to him within this stipulated period. And this interest rate generally will be very high. And there is also what is called as the net banking. With the extensive use of the computer and the internet, the banks, they have also now started the transactions over the internet. The customer having an account in the bank, he can log into the bank's website and he can access his bank account. He can make payments for bills, he can give instructions for money transfers, fixed deposits, and the collection of bills, etc. Then phone banking. In case of phone banking, a customer of the bank having an account, he can get the information of his account, make banking transactions like even the fixed deposits, money transfer, demand draft, the collection and payment of bills, etc., by using the telephone. So, as more and more people are now using the mobile phones, the phone banking is possible through mobile phones also. So, in mobile phone, a customer can receive and send the messages, the SMS, from one bank to the other. So, from and to the bank, in addition to all the functions possible through the phone bank. So this is all about the primary and the secondary functions of the commercial banks. Now let us see the other type of bank, namely the development banks. See, development banks, the business often requires medium and long-term capital for purchasing of machinery and the equipment, for using the latest technology or for expansion and the modernization. So such financial assistance is provided by the development bank. They also undertake other development measures like the public sector banks in addition to this development function. So like say subscribing to the shares and the debentures issued by the companies in case of under subscription of the issue by the public, and Industrial Finance Corporation of India, for example, this IFCI, and also the state financial corporations, SFCs. So these are the examples of the development banks in India. The other category I said is the specialized banks. So there are some banks which cater to the requirements and provide overall support for setting up of the business in specific areas of activity. Say the Exim Bank, SIDBI, NABARD, they are the examples of such banks. They engage themselves in some specific area of activity, and thus they are called as the specialized banks. So let us know about them. See, they don't get into the other activities. For example, the Exim Bank, if you want to set up a business for exporting the products abroad or importing the products from a foreign country, for sale in our country, Exim Bank can provide you the required support and also the assistance, the data, the information that you require for trading. Which helps you in foreign trading. The bank grants loans to the exporters and the importers and also provides the risks involved, the information on the risks involved about the international market, also status of the international market, about the risks involved in the export import. It gives guidance about the opportunities for the export or import, and also about the competition that is prevailing in the market, in the foreign market, etc. And small industries development bank, that's also a specialized bank. So this SIDB, for example, the small scale business units or the industry, they can avail the loans from the small industries development bank of India on easy terms through SIDB. These people can avail the loans. The small scale business units or the small scale the industry, and the aim and the focus of this SIDB, for example, is to promote, to finance, to develop, and to modernize the small scale industry. So it is confined to that. And there is also another very important specialized bank like NABARD, the National Bank for Agricultural and Rural Development. So it is a central, or say the apex institution for financing the agricultural and other rural sector activities. Rural sector, a small scale industry like your handloom weaving, it may be fishing, it may be small scale industries, or it may be the cottage and village industries, handicrafts, and the allied economic activities in the rural areas are supported by NABARD. NABARD can also provide credit both short term and long term through their regional rural banks. So the last type of banks which I referred in my previous talk, it was about the cooperative banks. See, the cooperative banks, people who come together to jointly serve their common interest, they often form a cooperative society under the Cooperative Societies Act. And when this cooperative society engages itself in the banking business also, it is called as a cooperative bank. So the society in such a case, in addition to the functions of the society, if it also has to take up the financial transactions activities, society has to obtain a license from the Reserve Bank of India before starting the banking business. And any cooperative bank as a society, it is to function under the overall supervision of the registrar of cooperative societies of the concerned state. And as regards banking business, if it has also taken up the banking activities, then the society must follow the guidelines and guidelines set and issued by the Reserve Bank of India from time to time. And there are basically three types of cooperative banks operating in our country. They are the primary credit societies, central cooperative banks, and also the state cooperative banks. So these are formed at the village or town level, and the village and town level, and also at the district level and the state level. So at the town level, district level, and the state levels, the primary credit societies are formed at the village or town level, with borrower and the non-borrower members residing in that locality. They are the members. So the operations of each society, why is it done so? The operations of the society, they are restricted to a small area so that the members also know each other and they are able to watch over the activities of all the members and also prevent frauds, if any. And coming to the central cooperative bank, these banks operate at the district level, having some of the primary credit societies belonging to the same district and their members. So they are the members of this district. The central cooperative bank or the district cooperative bank. So these banks, they provide the loans to these members, even to these state, even to the state level or the village level or the town level members, town level credit cooperative societies. So the state cooperative banks again, they are only at the apex level or the highest level. And the district level, central cooperative banks, what we call, which are at the district level, they function as a link between the primary credit societies and the state cooperative banks. Whereas the state cooperative banks, which are the apex level or the highest level in the state headquarters, in all the states, they mobilize the funds and they also help in its proper channelization among various sectors. That is, the money reaches the individual borrowers from the state cooperative banks through the central cooperative banks and the primary credit society. So it flows from the apex level, the state cooperative bank, then to the district or the central cooperative bank, then to the primary credit societies and to the members or the borrowers. Okay. So, thank you very much, friends. This is all what I wanted to cover in this little time, a little period of time, what is available for me to spare my time with you. So, thank